The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 21st day of January, and fascinating session for sure. Of course, you had a lot of lead-in here. You had John Logan, you had Steve Rhodes talking about the markets, giving their assessment, really great analyses, I should say. And now we're going to try to add to that. Today being Wednesday, you've got Larry Pesavento coming on straight after me and programming all day. And this should be a fascinating session, and I'll explain why. Within the context of what I always look for, I discussed the VIX index for years and years. I've been talking about the volatility index. For me, it is just it is part and parcel of the market. It is as important an ingredient as the price of whatever you're following. One of the reasons being that if the volatility index goes into the 20s, invariably you get quite a heavy sell mode, not just a sell signal, but a sell mode unfolding. Together with that, for a sell mode to be sustained, that is the downside, lower lows, lower highs, lower lows, lower highs, to be sustained, you need bad news. We've not really had bad news. None of the action that we're looking at right now is what I deem bearish. Yes, prices have come down. Yes, we're looking at the E-mini going from 2,088 to 1970, over 100-point declines, 1,000 points in the Dow. And yet, within that, look what we're facing here. We're facing an up channel in the weekly chart that is still not being pierced significantly in that what I call the Chapman Wave inside track, that dashed pink line. If you're looking at the Tiger Technicians show with the fabulous charts that we're able to feature here, look at that green line and that pink line, and the price went in there last week and bounced right back, and now is being sustained above the dashed pink line. That to me is absolutely imperative. Why? It is so important for it to hold, because we have really only made a peak B. No matter how I count it, this is a peak B in the weekly chart of the E-mini. 120-minute chart just went to an alternate count leg D. Let's just get rid of that for the moment. And let's just go to the numbers. And let me show you something as we go through the numbers. And one of the reasons why I've remained bullish, why we have not got bearish positions, are very unusual. The reason why I've been bullish is, well, it's a twofold reason. The first part of it is in almost all the weekly charts that I've featured for my subscribers to my opening call, I've shown that there are the unrequited peak D that we always anticipate hardly ever fails at an all-time high. In other words, you don't go to a B in a weekly chart and then fail at an all-time high. It is so rare. You'd have to go back and recount it, and then you say, oh, I missed something, so there's an alternate count, and here's the alternate count. It's really an F or a G, so everything's fine. We can go down. There's no way I can make that up. On the 19th, the week of the 19th of September, the Dow went to 17,350. The August plunge went all the way down. That's in the Dow, and the August plunge went all the way down to 15,855, and that was October the 15th. Did I say August? I meant October. And then you ran powerfully higher towards the up track, the inside track that has the containment area, and went to peak A, B, and C. In the S&P SPX.X, we've got a B. And that pattern is even more bullish because it's making higher highs and higher lows. So everything that I do is pointing, in my methodology, towards somehow, somewhere, look, we're at the 21st of January, and I've been discussing this all the way through January. I've been discussing how I was anticipating some way, somehow, for us to squeak to a higher high in the S&P above 2093.55. Let me just double, was that in 93? 2093.55, made the week of the week of the first week of January. And within this context, what we're looking at is the containment area right there is held beautifully as a springboard. The MACD is negative. The stochastic's at 81%, still okay, but it is turning down. So price has to be an arbiter of trend, and therefore it needs to close on Friday above the 9-period exponential moving average of 2040. Can it do it? It is at 6-7 points to go, and then hold that all the way through 4 o'clock on Friday. I don't know. But so far, the action is really very good. Now, you had that single leg A up. You remember I talk about a single leg A phenomenon, where very often you go single leg A up, and then you start to come down. And if you break the 66-ish percent area retracement, you got to be real careful, because you could come all the way back to the beginning, which would be at the 1972 low of the 16th of December in this particular move. So far, the MACD is trying to turn around. The histogram is very positive. It hasn't turned to a positive setting. It is still underneath the 0% line, but it is moving higher, and the stochastic has had a nice turnaround as well as the on-balance volume. So there was a minus, another A minus right here, another A minus right here, and very often by the time you get to your fourth A minus, your fourth A, that's the one that triggers a much better rally that actually goes to a B and a C. I don't know if we can do that. Can we go all the way from this level of 2034 up 12 in the S&P? I should also mention we are long the S&P. I decided rather than the Dow, which has IBM involved, I'd rather be along the S&P, which looks a little bit stronger at this particular point. In fact, we only have long positions. And even more importantly, what I'm really looking at here is the S&P by Thursday afternoon, tomorrow afternoon, really needs to be somewhere around 2042. It's at 2035 right now. It just needs that. So let me just run the numbers, and we're going to go through this chart by chart. The Dow is up 53 at 54 at 17,570. A single leg A right now, but it's really not going to be doing anything until it moves above. This is the moving average that was mentioned the other day as a potential that I might want to put in. This is a 21-day exponential moving average. That's a 17,622. Am I correct? Yeah, 17,622. The Dow needs to not only close above it, but it needs to make high highs and higher lows in this move, and it has to go into next week doing that. If at any point the Dow fails and goes under 15,000, today's low is 15,396, a break below that will say, hey, you're about to test that 17,262 to 17,243, these series of lows, and that's going to be very negative. But I have to tell you, with all the news that's gone on, this, I believe, is actually quite positive action at the moment, right as we're speaking. Let's go to the QQQ series. The QQQ series, 102.49. Now this, it was acting terribly, went to a trough E, and now it's acting very well. And in fact, the weekly chart went from looking kind of poor to starting to improve a lot. It hasn't even gone to the inside track lows, which the S&P and the Dow did. So this is very nice action. Of course, Netflix, let me show you Netflix right now. Netflix, nice little drawing I put over there just for fun, because it was so hard to see that was actually the price. It gapped up from yesterday's close of 348.80, and today it's gone to a high of 414.68. But that's not the issue. The real issue is, look at this gap. The gap with a high of 395.52. So far, today's low is 401.87. So now I can draw this in. See this right here? That is this trading band, and we have gone above it with that price right there. Little schnoz over there, right there. That is a candle There's nothing here in between. That was just a little bit of fun I was drawing in. And that's the weekly. Look at that. So Netflix has come alive and really saved the day for the Qs. The Qs were not acting very well at all. IWM, let me just check something here. IWM is the Russell I shares. Not acting all that well. 116.46, only up 0.25. And the Qs actually were up 72, up 69%. So IWM is only up 0.20%, and that's not too great. But it's a high-level consolidation in the monthly chart. Weekly chart is holding that up channel okay. I think it's kind of a laggard right now. So let's just go on to the New York Stock Exchange, NYA.X. Look at this. Walking that dashed line, trying its best. I think it's going to be, I think if the Dow makes and the S&P make new recovery highs, I'm not sure that the NYA is going to be following. It's going to be kind of lagging, and then the next decline is going to be a big test for everything. So now let's go to gold. It's a little difficult because gold, it's an alternate count E/B. I think gold is making a very short-term top, even though the stochastics are 94% and the MACD is very, very strong. It is leg E, peak E, actually, in the 120-minute chart. I think gold is going to be pulling back here, and they can go together with the dollar because the dollar is having a high-level consolidation, and if it has a bit of a pullback, the two can go together. They went up together. They can just have a consolidation, and I really think that it's just a consolidation in both, certainly in gold, because the gold weekly chart, GC, the gold weekly chart is still acting very, very well. The monthly chart is even starting to improve, and I'm going to draw the pattern that I'm anticipating here. A move in gold towards the 1400, 1380, 1400 area, and it'll test the previous high of 1396 that was made in the continuous contract back in March of last year. Could even test the previous high of 1437, and then I think gold will take a very, very sharp decline, maybe as the dollar starts to rally again. Sort of the way I'm thinking of it. But in the meantime, I think we've got a good couple of months going for the upside in gold. Now, we spoke about the dollar. Let me just give you the dollar right now. Dollar's acting well. It pulled back quite sharply, held the 92.41 9-period exponential moving average, but there's enough evidence to say that this is a kind of a toppy-ish area, maybe 90. It's at 92.88 on the dollar index. I think it can go maybe to 93.50s, maybe 93.70s, but I think they'll be in a consolidation range, and I would not be surprised if I drew this in, as I've done in the weekly chart. If I draw this in right here, that we are looking at some kind of a consolidation unfolding, and it looks something like that. And that means that this can go just a tad higher. Okay, so, and there's that monthly chart which says that the dollar has broken to new recovery high right there. Right, remember we were looking at this? I've got a break coming up. 121 was the previous high, major high, but it's the 92.63 high that we were testing, and we went to 93.26. We've done the job of testing and breaking just above it. I'll be right back. Basil Chapman, Tiger Technicians Hour. We'll look at the euro and other things, and some stocks when we get back. We'll look at crude oil as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we wanted to look at the euro. The euro had a nice pop this morning. Hit what? Hit the 9-period exponential moving average of 1.679. It went to a high of 1.6795. Exactly. And it's pulled back. First attempt at a rally. It's just going to take a little while. It will have a rally. And the dollar, of course, as we saw, pulled back, hit the 9-period moving average support and bounced, and that was important. Most significant, though, is the USD JPY, the dollar Japanese yen currency pair. Had a pullback from yesterday's very nice gain, went underneath yesterday's candle. Now it's slightly above on the inside of that candle. That weekly chart, that H pattern is formidable. And that's saying that there's a real good chance that even though there could be a rally in the USD JPY, that we will be seeing a test of the 115.84 low of the week of the 16th of January, that's last week, and if that's taken out, 115.55 will be the most important support to hold. My eye says that there's a good chance that it is, after such a fantastic move to the upside, this might coincide with the dollar pulling back a little bit, having not taken out 124.13, the high of 2007, but in fact gone to 121.83, just about 3 points lower. A little consolidation is taking place, but it will probably over the coming weeks get to the 124 level if, and this is a really big if if in fact we do not take out the low of 115.84. In other words, if there's a close above last week's high of 119.31, that'll say there is another H pattern which could in fact go all the way to retest the high, and that's going to be what we're looking at. So as I'm looking at it at this particular point, I'm going to take that line away. All I can say is that it's imperative, if there's going to be strength in the dollar yen currency pair, that 119s is approached and held within the next 3 to 4 sessions without hitting the 116s. All right. So I shouldn't say, hitting the 116s, because the low today was in fact 117 point what? 117.54. Okay, all right, fair enough. Now, a couple of things. Within the context of the market that we're looking at, we are seeing a rotation. The rotation is not yet complete for the IBB, which is the iShares Nasdaq Biotechnology ETF. We had such, I'd say it's bad luck, but bad luck, maybe it was just bad trading, because yesterday we were long and just got stopped out for a very tiny loss, 1.20 or something in the equivalent of the 200% long, the IBB. And then it spiraled to the upside, which is what I was wanting. Leg D in the IBB, leg E in the BIB, and now what we're looking at is there is still internal strength, just enough internal strength. And the big question is, am I correct in saying this is leg C in the weekly chart? Because that would suggest that we are not done, that the very best of the biotech still has just enough energy to say there could be a pullback next week, and then maybe the following week as we go into the end of January. Is that correct? Let me just check that out. Yeah, that would be the case, because this is only the 21st, so that takes us to 28th. Let me just double check. Yeah, it's coming up in a second. I can look at the calendar. And that would be very interesting. Just enough strength in the biotechs to be able to maintain slightly higher highs. And as we see the that kind of strength, it helps the QQQ series just enough. And that's the reason why I'm saying, look, we're already on the 21st of January with 10 days to go, 9 days trading, or whatever it is, 7 trading days to go. And we've held so far. We haven't broken down. Days young, of course, but we haven't broken down. And you've got until Friday the 30th. So that means we've got the 23rd this Friday, and then we've got a whole week. Then that would take us to February, the first week of February. Wow. I don't know if that's possible, but anyway, that's what the chart is saying, that if this is leg C, we still have to make a D before we can have a deeper decline in the IBB. And as long as there's internal strength in a sector as important as the IBB, the Nasdaq iShares Biotechnology ETF, that's a positive. So now let's go back to our story. Most importantly, what we're looking at here is when you look at Home Depot, which has been the absolute leader, it started to stall. Is that the music? Good grief, that was quick. Yep, that's the music, and I'll be taking a break. But I'm looking at this and I'm saying that coincides with the HGX, the Philadelphia housing sector, having made some kind of a top. There again, I've got a C in the weekly and a C in the monthly. Oh, I tell you, this is a fascinating market.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let me just finish up here. This is A to B. That is 99,604. So we've got right there TEF, okay, B, C. Let me finish this up and I'll tell you what the letters are. I had a question about this. It looks to me like this has been Rubened. Yep, this is going to be a very interesting chart to look at. So A, B. So there's an alternate wave count. Oh, this is going to be very interesting. We're looking at Nathan's famous something, Coney Island. And that, if that's an alternate count, then that's F/C, and that's G/C, G/C. So Nathan's right now, the daily has made a top. It's at 77.47, made a high of 83, round number high. Hey, you didn't tell me there was a round number high. 83 RN high, all-time high. And that's also a peak, probably a peak F top if, in fact, it takes out, it's a 77.47. If it breaks under 75.30, I'm pretty sure I'm going to have to call, 90% in the stochastic. I can't put that down arrow. I have to wait. So I can't wait. I'm just putting a question mark here to see whether or not that's an F or a C, B in the weekly chart. So the question was, is that, Basil, can you look at Nathan's Restaurants a short? You know what I'm going to suggest? I'm going to suggest yes. It's at 77.47. If you wanted to short it, you'd have to short it either right here at 77.47 or have patience to wait for a bounce to see if we can get to around about 78.50, 79.10. But if it's going to keep going down, I mean, look at the 120-minute chart, because if that's close to, oh, yeah, it's down below the 200-period moving average of 77.81. You know what? I'm going to suggest that it is a short, but the best risk-reward as a trade says that if you were to put it on now, I would rather put it on as an option with not a 75. If you can get a 77.50, I don't know. But if there's a 77.50 put option, I would just nibble at that right now, and I wouldn't have it January at all. I'd have it, on a weekly, I wouldn't have it. I'd have it on the monthly February. And that, to me, makes more sense. There could be a bounce. The bounce could go all the way to the 78.50, 79.30 area. That's probably the best place for risk reward. But it does look like it has a problem. Had a little too many Reuben sandwiches, and I don't know about the sour. Yep, maybe too much sauerkraut. But that's the way it's looking right now, especially with the round number high. And I wouldn't make the round number high of 83 an 83.01 buy stop. I would not even go that far, because if it gets to the 9-period moving average of 79.78, anywhere in that towards 80, I'm out. I don't want to even wait to see if it's going to test that high bar of 81.26 of the 20th of January. It has to be working. It has to be working now, and it has to tackle the Roman candle of the 5th of January with a low of 76.01. So for a point, before it bounces, 1.5, I'd probably say to you risk reward. If you ask me, would I short it now? I'd probably say yes if it was almost like an intraday thing, but I would probably say no, I'm going to hold back, and I'd wait for the bounce. Bounce doesn't come, it means that you got a better chance of shorting, but the bounce is where you got a better risk reward. Hope that helps you. Now let's go to question about, I had an email question which was, give me 1 second. Yeah, what does the yearly wave count look like on any of the major indices? Would you be able to post that on the opening call? Dan, I don't on TradeStation. I must call them up. I don't believe I can get the monthlies. In other words, sorry, yearlies. I can get monthlies, and I can go back as far as the chart can go, but I don't get quarterlies, or I can't change the time frame into yearlies or quarterlies, which is a shame, really, especially for the Chapman wave. But if I do a Chapman wave of the 2009 low, look, it's easy enough. If I go INDU, if I look at this, that has to be A, where it's got to be right now. If it's a yearly chart, that looks like that would be a peak, and then it takes 1, 2, 3, 4, 5, 6, 7, so that's A. And then it goes 1, 2, 3, 4. I didn't realize that. I thought I did it last night, and I was saying, hey, you know what? I'm getting a D. No, I'm not. Look, if that's a yearly chart, then this is all, that's 1, 2, 3, 4, 5, 6. And on the 7th month, it makes a new high. So that's still leg A. So A has to be where D is, and B has to be, we're only in B. Yes, if we are only in B in the yearly chart since the low of 2009, and you have to wait a whole year before you can get a peak, this can take you out to 2017. I'm not sure about this. 2016, before you even get a D. No, you got to get a whole year without going to a new high. So that would be the whole of this year. And then you'd get leg C. Oh, my. Now, 2017. Yeah, I'm not sure about the yearly charts. I'll have to check on that. But, all right. Well, summer quarterly, I think, were much better. Now, let's go through a couple of things here. I said we'd look at the euro. I did. Euro just bounced away from the 9-period exponential moving average. What happened to my chart? EUR, USD. There it is. Doesn't look good in the monthly chart at all, although it's starting to get a little flat at 3.50 in the stochastic. So this says, yeah, it could have a little bounce as the dollar, if the dollar has a pullback, but it's no more than a bounce at this particular point. And I spoke about the USD JPY, right? And I wanted to just go to the copper. The copper is trying to rally here. There's that, remember, Chapman wave Roman candle at lows, potential lows, is a very bullish pattern. Up in the highs, it's a very bearish pattern. I spoke about this the other day. So if the high-grade copper to this week's low is at 2.537, 2.532, if it doesn't go back there and hold there for at least, let's say 2-3 days without much of a bounce, if it does that, it says it's going to go all the way to the bottom. As it stands right now, you see the 200-period moving average exactly where we are in the monthly chart. 2.6060 right there. So I see some signs here that say that high-grade copper could have a little bit of a bounce. Okay. Now, there's, bonds. I haven't touched bonds. I meant to do bonds first of all. This is leg D. We finally got our leg D in the TLT at 133.73, down $1.22. I think that bond yields, look at this. You see here, bonds went to a lower low. Did they really go to the lower low? 25.54 to 24.32. Oh, 23.51. 23.51. Change that. So we've gone down to 2.35. Very interesting. So there's a new recovery, unrecovery low in the 30-year T-bond yield. The 10-year has gone to a lower low, but it hasn't this week gone to lower than last week. But the 5-year has not gone below the 11.18 low that it made back in October of last year. Very interesting. So I'm looking at this and I'm saying, bonds are getting real close to some kind of a bounce, but we've been here before in the other 10-year and 5-year notes, but we've not been here before in the 30-year. This is all-time lows in yields. Very interesting. You remember, when you get all-time highs, stocks that go to all-time highs tend to continue to want to go to all-time highs. When you go to all-time lows, that instrument tends to want to stay at all-time lows. So it's going to be really difficult, the magnet of going lower with the Fed's desire at this point to start at least thinking about, bonds having a higher rate of return. And the competition is, internationally, we've got all these other countries desperately trying to keep their rates as low as possible. So, and Otis says bonds need to pull back on the slingshot if they want to take on 1.6% on the 10-year. Yeah, this is very interesting. 10-year Swiss bond negative at 0.16%. I mean, this is unbelievable. No, it's believable. You remember, I spoke about this. As long as I've been at TFNN, I've spoken about the Japanization, eventual Japanization of our bond yields. So that's going to be very interesting. So question of the day. Basil, if UTX makes a new high, will that make leg G, UTX? Oh, man, don't even talk to me about UTX. We missed it by 10 cents yesterday. The low was 115.90, and I wanted to buy it at 115.80. And it missed it by 10 cents. And now it's trading at 118.71, and that was my target, to go above the high of 118.02 right there, and then to be tackling 120.19. No, this is the weekly is only leg C, and the daily is only a new leg C, so peaky in the den. So that's the way I'm looking at it at this particular point. Very positive. UTX, and of course, UTX is my intermediate term Dow indicator. GE is my short-term one. It's acting okay. It's up 19 cents right now. Yeah, but UTX is the one that's going to towards all-time highs. Okay, caller, we've got a caller. We've got Dan in Basket Ridge. Sorry, Dan, you were covered by something else on my chart, but I got you right now. Dan, you'd like to look at?
The NASDAQ composite. And
okay.
Thank you for trying. That was my. It was. I was calling about the yearly chart yesterday, or emailing.
All right.
But my
so is this a? You got a question about the composite itself? This is the very broad composite index?
Yes, sir.
Okay. And the question is?
Your thoughts upon hitting NASDAQ 5,000 before any real significant downturn.
Okay, so this is what I've got. and here I can use the Chapman wave alternate count. I have no problem with it whatsoever. It's F/B as we are in the weekly chart. The NASDAQ composite is at peak E in the monthly chart, above the 9-period moving average. MACD is turned down, but still very positive. Stochastics at 94%, very positive, and the on-balance volume is suggesting we've got to be a little bit careful. So here's the question. The question is, we went to 4810.86 on the 28th of November, 4810.86, and then we went to 4814.95, 26th of December. And that essentially went to an E. So that goes to a peak E. And none of this, let me just double check. Yep, none of this is a problem in the Chapman wave count. All of this is, unlike the Dow and the S&P, all of this gives you the spectrum of having a potential alternate count. No problem there. So now your question really is, do we get to the low 4,000s before we get to the 4850s? Let's go one step at a time. Which one do we go to first? And my answer to you is based on the weekly and the monthly charts, so far, it's quite good action. Very good action in the monthly, quite good action in the weekly. The daily is the one that's got these H patterns. Now, there's something about these H patterns that you will learn when you look at them over a period of time, and if you look at enough of them, you will learn that the arch formation, as it looks its most devastatingly precarious, it just has a way of suddenly turning around and bouncing again. And this is what I mean. When you're looking at an M pattern, a lowercase m pattern, when the trough of that M looks like it's about to be broken, that's where you often get the next arch formation. Now, I don't know if we're going to get that right now. Everything about it suggests, based on the MACD and the stochastic, that there's a really good chance that you could do it. So I'm going to answer you with this. I'm not going to make a conundrum or anything like that. I'm just going to say to you, based on chart formations, if the composite index is able by Friday at 4 o'clock to help the weekly chart, in the daily chart, get to 47, somewhere around 47.18. It's at 46.80 right now, without taking out today's low of 46.29. I would have to suggest to you that we've got another arch formation, which says you've got limited upside, but it's possible to make a new all-time high, not an all-time high. The all-time high was way back in 2000. Am I right? Yeah, the all-time high was 51.32. So, and the high so far has been 48.10. So we're quite a bit underneath it, but having gone back this far, most of the time when you have this very deep cup formation or bowl formation, you do go back to the left side lip. So all the evidence is doesn't give you a time, it is all the evidence is pointing to the 51.32 as being an upside target. When is the issue? So I think I'd like to put it together with the NDX. I'd like to put it together with the NDX 100. So can you hold on?
Absolutely.
Great. We'll be back with Dan and Dow.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, stay tuned after my show for Larry. It should be a wonderful show as always. So let's go back to Dan, and we're looking at the NASDAQ. What I did, Dan, is I grabbed the VXN, which is the CBOE NASDAQ 100 Volatility Index. And the way I'm reading it at this particular point, it is at 20.14. If, for whatever reason, I don't care what the reason is, could be a Netflix, could be Amazon, could be a bunch of things, just certain stocks, whatever it is, if this is knocked down to under 19, if it starts to trade in the 18s, that's going to be very positive for the QQQ series, which is the NDX 100 trading vehicle. As it stands right now, there's a trend line in the QQQ series right here that needs to be pierced, so that if the Qs can close above 102.60, they're at 102.37 right now. Especially if it could close at 102.80 or 90 today or by mid-session tomorrow, there's a chance that if it breaks out, then that MACD is going to start to turn positive. The 0% line should turn positive, and the stochastic should be helped. So I can just give you parameters to say, as it stands right now, and it doesn't look like it can all be done within a week and a half or so before the end of the month. It looks to me that if there is a rally, and because the market has not been able to push down as it should with IBM and all the news, the Swiss franc, just a whole bunch of stuff going on, that if the Qs are able to push towards the 103 area, especially by Monday, this coming Monday, if they're trading anywhere close to 103.50 to 104.10, there's just a real good chance that towards the end of January, beginning of February, we could in fact go to that higher high, and I will then call it leg E in the weekly chart of the QQQ series above 106.25, and that would really help me because the S&P should in fact be making, and this is going to only be a leg C, but the S&P has all the way to go from 2035, has 60 points. That's like 600 Dow points to go. It's a lot of points. All I'm saying is it looks to me like it's going to take time, or it's just going to be a sudden run to the upside, and that's going to be one of those big spirals, and that'll take us there. So the parameters are very clear. Looking at the QQQ series, a close under 101, I'd probably say a close under 100.50 would be quite negative. And anything in the 103s would be positive. And so far, it looks like the bias is kind of leaning, for me, towards the positive side in almost all the things I'm looking at. And I'm looking at some stocks that I wanted to actually add today as buys, and I've missed them. They're up really nicely. I'll have to grab them tomorrow if I want to. And they are very important stocks. So I think I'm looking at a bias here towards the upside. So I hope that kind of answered your question.
Seems that not enough money's gotten sucked into the market yet, and just doesn't seem that, like you say, the euphoria is just not there. There's people just not.
There is a lot of money in the market. It's kind of subtle. It's there, but the euphoria of driving around and seeing TVs, and I remember driving around in the evening. You would drive and you see people's TVs in their houses, and they'd be tuned to CNBC. I mean Kramer and all that stuff. So I don't see anything close to that now, and I suspect that that's a period that we will get into. But I think there's going to be a sharper decline a little later on to scare people again, so that each time it's a stair-step move that comes under pressure, and we'll be following it as close as we can here at TFNN. But I don't see the euphoria. I do see more people, but not euphoria.
Thanks, Basil.
Thank you, and a great question, Dan and Baskin Ridge. I appreciate your calls always. Folks, stay tuned for Larry President, and check out my opening call. It's my daily newsletter. You can go to the front page and get it free for 2 weeks. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.